Hey trader, I'm loaded Forex, aka no signal, no entry. In today's video, I want to show you the secret of moving average and how you can apply it with pure technical price action to take quality trades all the time. This is a proven and tested system I use every week to pull out profits from the market. If you are new to my channel, hit the like, subscribe and turn on the notification button, and I will see you after the intro. The first thing you need to do when you open your trading chart is to activate the moving average. And the name of the moving average I'm using in this video is 20 EMA. For you to be able to combine the moving average, there are some things that you must put into consideration, which is the market structure, which is the father of all market analysis. You have to ensure your price action is trading either above or below the moving average. It depends on the market sentiment. Let's assume the price action is trading above the moving average. It's a sign that the buyers are the one ruling the market. In a situation whereby the price action is trading below the moving average, is a sign that the sellers are the one dominating the market. Let me show you an example when the price action is trading below the moving average. Looking at the chart right now, you can see that the price action breaks this moving average to the downside, then creates low, lower high, lower low, lower high, lower low, lower high. When the price action is trading below the moving average, which is 20 EMA, the sellers are the one in charge of the market. They were pushing the price action down. This is a beautiful example of price action trading below the moving average. Let me show you another beautiful example when the price action is trading above the moving average. Looking at the current price action, you can see that from this point here, the price action successfully break the moving average to the upper side by creating a new high, forming higher low through this retracement phase, then higher high, higher low, higher high, higher low, higher high, higher low, then higher high. When the price action is trading above the moving average, it's a sign that the buyers are the one in charge of the market. One of the functions of this moving average is to use it as a confluence to support your market sentiment. Let me show you how to combine this moving average with the market structure. Let's assume the price action is bullish right now. The first thing you have to do is to establish this pattern. A, B, C, D movement. You have to ensure that the price action form something like this, from this point as A, this point as B, then this point as C, then this point as D. When you're able to establish this A, B, C, D pattern, that is a confirmation that the buyers are now ready to switch the market phase to uptrend. Let me show you the bearish example. When you establish your 20 EMA on your chart, for you to confirm that the price action is bearish, you have to establish this pattern: A, B, C, D movements. When you establish this A, B, C, D pattern, it's a sign that the sellers are now ready to change the market phase from bullish to bearish market structure. Let me show you this example on chart. These are moving average around this zone here. Then the next thing, we want to establish our ABCD pattern. This is A, B, C, D. The second step, you have to combine it with key level, either support or resistance. When you are buying, that means you are using support key level. When you are selling, that means you are using resistance key level. This zone is serving our recent support key level, and if you establish this key level to the previous or historical data, you will agree with me that the price action reacted around this zone here, price action reacted here, price action reacted here, price action reacted around this zone here, price was rejected around this zone here. It's a sign that this key level zone is a very valid and frequency key level zone to hold the price whenever the price action retraces down to this key level. After establishing our support key level, then you have to pay attention to the factors or confluences around the point of interest. Number one, the market structure is bullish by creating this A, B, C, D pattern. Then the next thing, our 20 EMA is around our point of interest. Then the third one, our support key level is also there. Can you see we have three confluences before we can decide to execute our buy position? The next step, we have to exercise a lot of patience to wait for the price action to give us a retracement phase back to this key level so that we can execute our bullish sentiment at this point of interest to the upper side. The moment the price action approach this support key level, if you pay attention to the reaction of the price action, you can see that there are multiple wicks rejection at this support key level zone. Then the price action formed this pattern, morning star. Looking at this morning star is a sign that the buyers are warming up to take charge of the market by continue the bullish market structure. Morning star represents bullish reversal candlestick pattern. Then you have to establish your buy position order by placing your stop loss below the wick. Then we target the next resistance key level depending on the risk to reward you are targeting. Let's play the candlestick. You can see that the price action smashed our TP level. Here is the bearish example. When you establish your EMA on your chart, you have to establish also the ABCD pattern to confirm that the sellers are actually ready to push down the price action. From this eye, we have our A to B, then we have it to C, then to D level. The next thing, we have to establish our key level zone. If you share the historical data, we have price reaction around the zone here, price reacted here, price reacted here, price reacted here, price reacted here as well. You have to wait for price action to give you signal that the sellers are now ready to push the market down at the point of interest. We have the first week rejection around here, the second week rejection around here. Right now, what we have to do is to pay close attention to the candlestick that represent the presence of seller at our point of interest. The next formation of candlestick pattern that form at this point of interest is dark cloud. Dark cloud candlestick pattern is a bearish reversal candlestick pattern. When you see this candlestick pattern at a point of interest, it's a sign that the sellers are fully ready to push down the price action. What you have to do is to pick your short position tool, then activate your sell sentiment by placing your stop loss above the wick here. Then you target the next support level depending on the risk to reward you are targeting. Let's play the candlestick. Then the price action smashed our take profit. Let me show you another brief example on how you can use this system on Euro USD. After activating the moving average on our trading chart, the next thing you have to activate is the pattern, ABCD pattern. When you establish this ABCD pattern, is a sign that the buyers are fully ready to push the price action to the upper side. After that, you have to establish the key level zone, which is the support key level, because we are looking for buy opportunity. We are in a bullish market sentiment. The next thing is to establish our support key level zone and see how many times price reacted at the key level zone. Price reacted here, price reacted here, price reacted here, price reacted here multiple times. The next thing is to exercise patience and wait for the price action to retrace down to this support key level zone so that we can take buy opportunity. And you have to check the number of confluences at our point of interest. The first one here, we have our 20 EMA, our ABCD pattern, and we also have our support key level at our point of interest. That makes it 3/3 confluences at our point of interest. The price action has approached our point of interest. We have to pay close attention to the reaction of the price action and wait for the price action to talk to us, to give us the signal that the buyers are now ready to push the price action to the upper side. And we have to exercise a lot of patience for the formation of the candlestick pattern that will represent the presence of buyers, that they are willing and ready to push the price action to the upper side. When you spot this dangerous reversal candlestick pattern at the point of interest, execute your position without hesitation. Now let's execute this trade by placing our buy order here, then we place our stop loss below here, then we target the next key level zone. You can see that the price action smashed our TP level. If you are blessed in one way or the other through this video, don't forget to hit the like, subscribe and notification button so that you can get notification when else we upload another exclusive video like this on our YouTube page. See you next time.